Good afternoon, everyone, and welcome to another edition of our weekly videos. Sami Abusaad here with the Strategic Swing Trader. I sure hope you're staying warm on this unbelievably windy, rainy, and foggy day. We have wind gusts of, I think, 80 miles per hour today, and I live on the the two top floors of the tallest residential building in the city. So it's certainly not for the faint of heart, but I love it. You feel cozy to be in a nice and warm place, but certainly not for the faint of heart. Okay, I got a great video for you. Be sure to hit the like button if you like the video and if you find benefit in it. I'm going to talk about the market, but I'm also going to talk about how to think like a professional trader. So let's get started and switch on to the charts. So let's take a look at the charts. This is the market. We have had, I think, a 5-week uptrend run up in the Qs, right into the declining 20 and right into resistance, but too strong now to expect another pullback, I think. I'm going to take out my annotation tool. So let's go ahead and get started. Again, I sure hope the wind, you're not hearing the wind gusts because I can hear them, and it's just an unbelievable day. But again, it feels great because it feels really cozy to be in my office today. Okay, crosshair tool. Okay, so we've had this huge run up, and then we retraced about, if you look at it, we really retraced about 75% of the drop. So that's really, really too bullish. Unfortunately, I like to trade bearish markets a lot more than bullish markets. And with this rally, I now don't expect the market to continue the downtrend. I do expect the market to come in a little bit. Where to? Who knows? Maybe here, maybe like 158. Maybe we just come into 160 initially. But I do definitely expect the market to come in. In fact, I'm short the Qs, but mostly as a hedge to my long positions. I'll show you. So this is my account. So I just have a couple hundred shares, 33,000 basically, of the Qs short, but only as a hedge because I don't want to. And I also have 5 shares of Amazon short. I made $500 just the 5 shares yesterday. I'll talk about Amazon in a minute. I also have Apple from 146.38, right? From 146.38. So I don't want to get out of it. I already got out of half. I had 250 shares. So I already got out of half. I'm trying not to get out of the back half until it reaches 180 or so, which is the declining 20 on the weekly chart for Apple. Take a look. That's about 180. So that's my target. I'm trying to hang on to it, but I do think the market is going to pull back, and Apple is just a market stock. And so I think so that's why I did the Qs short as a hedge. Okay. That's yesterday's P&L, but I just have I happen to have the account open. So I think the market pulls in. Unfortunately, we don't have the best setup at all because we have a rising 20, we have support below, but I think the market pulls in, and from there we probably try to bounce, and if we fail, that would be our indication to go to turn bearish again. So yes, I'm already short the market, as you saw. But what I'm saying is, I think we're going to get a bounce, and if we fail on the bounce, fail to make a new high, if we fail to make a new high, which I think we will fail, then that will be our indication to go short, as the daily will be downtrending. We'll have a lower high and then a lower low once we break under the pivot low, and we'll also have a weekly sell setup. So that's what I'm anticipating. The SPY is identical picture basically to the Qs, except it's a little stronger than the Qs. And I wanted to talk to you first before I went over the watch list. Before I go over the watch list, I want to talk to you about what I did the last few days with Amazon, Apple, Tesla. I didn't do Facebook, but I did Amazon. You saw I'm still actually in Amazon short as an earnings play. Somebody sent me a video on Thursday, I believe, or Friday, when I took Amazon short. Some educator said it's a long because it's breaking out, but the guy's an idiot, I'm sorry to say. Look, breaking out into, look at all this resistance, but it's not that. That's not why I shorted it. First, I have an earnings strategy that I play and that I call. This was an official call for the strategic swing trader members. So I have certain criteria that the stock needs to meet, and it did meet the criteria. But think about it like this. Just think about it like this. The market has been on a tear, right? The past 5 weeks into a declining 20. In order for it to drop, it needs a catalyst. It needs some big company to report bad numbers or something. So I thought it's a great idea to do Amazon short since itself it has a weekly sell set up, right? And we've had 4 to 5 weeks, 4 green bars on the weekly chart of Amazon into a declining 20. This is a good setup to for this is a good setup to come in a little bit, at least a little bit, because I think we retraced too much to actually be totally bearish again. But I thought Amazon could be the catalyst for the market, and that's why I went ahead and shorted Amazon. You don't play long a stock that's up 2 green bars into earnings. Why is that? Because it means that the expectation amongst investors is is high. They're expecting the company to do well. So the company would have to do really, really well on the earnings call in order for it to gap up. It's much easier for a stock to disappoint when the investors and the traders have high expectations, because anything negative they say, and the stock will gap down, which is precisely what happened with Amazon. But again, it's not just that. I have a criteria and I have a checklist, and that's why it was an official call for the strategic swing trader members. And then again, I thought Amazon might be the catalyst for the market. Does that make sense? Apple, I'm in it long. Apple, I should have actually even maybe added to the position, but I already had, here's the thing. When you're playing earnings, it it it's really important to keep the size controllable, or I mean, the size manageable, I should say. That's 21,000 dollars worth of Apple. So that's why I didn't do it. But look at Apple. Did it to add more to it? I had it from here, but I didn't add to it on the earnings. Did it make sense to play it long? Of course it did. You know why? The market wasn't yet at the declining 20 on the weekly chart. Apple had a red bar into earnings, which means investors were not expecting a good result for Apple, right? And then look at the moving average. It's pointing up, curling, starting to look higher. So Apple was actually a good thing to play long. And that's why I didn't get out of my shares into earnings. When you're swing trading, you usually don't hold through earnings. I held. Tesla, I played it short. Now, yes, Tesla the next day, it gapped down. I made a little bit of money, not a whole lot. Um, but I actually did a video, so go check it out if you want. I showed my P&L and I had Tesla, and I think in the after hours it made $300 to $400. The next day it rallied, closed out of it over the 5-minute bars high, so no problem. Made a little bit of money, but Tesla made sense also to play short, right? It didn't make much money, but it made sense to play short because look, what kind of a moving average do we have? Declining, right? We had 1, 2, 3, 4 green bars in a row into a declining 20, a flat 200. So that is exactly the kind of play that I want to play short, not long. And it gapped down, so it worked, but of course it ended up getting bought, so I had to trail it, and it didn't make much money. But the point is, you have to think like a professional. You have to think the right way, because if you think the right way, the money's gonna come. If you think the wrong way, money will never come. Does that make sense? So Amazon made sense to play it short, right? Tesla, it made sense to play it long. Apple, it made sense to play it. Amazon and Tesla were short. Apple was long. And the rationale, I'm providing you with the rationale. But you don't just say, oh, you don't just say, well, Apple, is the hottest company in the world. You go to the stores, they're always packed. You know, it's a really sexy company with a cult following. That's nonsense. That's not logic, right? What I provided you with is a lot better logic. Actually, I played Amazon also in my day trading account yesterday. That's how bearish I was on it. It had a perfect breakdown in the afternoon. I don't trade Amazon. Um, I don't like to do the high flyers because they tend to get super spready, like a dollar spread on Amazon. And so okay, I shorted 100 shares. So a dollar spread, that's $100 that I'm throwing away. That's not much, but if you do that routinely, if you trade spready stocks routinely, and you do the math at the end of the year, how much the spread alone is costing you, it would cost me like $100,000 that I would have to make extra just to actually um, pay for the spread. So it doesn't make sense to play spready stocks, and I don't usually play spready stocks, but this was just perfect as a short under 1645 by 1650. Let's see if I remember correctly. Oh, 1646 by 1650. So I was actually slightly undersized. Let me see what my P&L looks like from yesterday. Um, so here we go. I don't know where it opened. I think I opened it. Um, it's not open. Oh, there it is. There it is. So here it is. Amazon, there is Amazon, made $1,000. One shot, one target. Entry at here. I got it a little late, probably 3:45, I think. An exit at 3. Did I say 3:45? I meant 16:45. And then the exit was at 16:30, 16. I don't know where, 16:35. So it dropped a little bit more, but that was my exit. And then that was I guess that was my day yesterday. It ended up being a nice day. Cenex made the most, but then after that, I think OPK made a little bit. PFP. After that, it was Amazon. It was Amazon. Okay, great. So I wanted to share with you how to think like a professional trader, basically, when it comes to earnings. I see people on YouTube, educators, unfortunately, doing videos on the sexy companies, right? Because those are the ones that attract, that have a following, and they analyze them, and it's just mumbo jumbo, sort of stuff. Nothing practical, no logic, just to say stuff, right? And get people to watch their videos. It's disappointing. This is the one thing that I don't like about the industry that I'm in, is you get all these good talkers out there that just want to talk about the sexy stocks, but provide you with nothing practical, no logic, no proof, right? Like I showed you, like I I showed you my P&L, my live account, showed you yesterday's trading account, P&L for yesterday. They don't do that because they're fake traders, unfortunately. So that's the only part that bothers me about being an educator. Otherwise, honestly, it's my calling. I love being a teacher. I raised my brother since he was 13 years old, so I just enjoy it. It's what I'm good at. And but in trading, it's again, it's disappointing because you have to compete with all these fake traders out there, unfortunately. But look, if they don't show you proof, if they don't provide you with logic, then it's on you if they fool you, right? Am I right? If they don't show you proof, there's no logic to their analysis. The logic has to be intrinsically valid, right? If there isn't, then and you get fooled, then it's on you more than it is on them. But anyways, I'm going to show you some swing ideas for Monday, for tomorrow, for today is Saturday, so in a couple of days. Cody, COTY, breakout plus 1, 2, 3. Like it a lot. It's a daily transition A play. Digitally is a little bit already up and running. It printed a big green bar. It's also transition A on the weekly chart, but again, it's already kind of triggered transition A on the monthly chart, so that's not bad. It looks really, really higher. It looks very bullish. DVAX is a daily buy setup. What I like about the DVAX is it tried to fail already. So if it goes back up on Monday over the base, then it should be good. So I like the DVAX long right here, stop right here, and then target at the prior pivot high. Guild is more of a long-term play. Love the daily, but that's about, unfortunately, We don't have a lot of reward to risk, and so it's got to be a long-term hold. It's actually, I can't go to the quarterly time frame. This is a monthly time frame. That's the largest time frame I can show you on this platform. But if you go to the quarterly time frame, if you use, for example, TC2000, you can go to yearly time frame. This is a quarterly buy setup. And so I really, really like the guild to go back up to 120, but to 120. I can't draw a straight line. That's about 120. But the market needs to stay. The market needs to stay bullish. If it doesn't, then the guild is not going to get up there. So I really, really like the guild. Not so much as a swing trade because on the daily chart it doesn't have enough reward to risk. More as a long-term trade. PDLI, gorgeous base on the daily chart as a breakout. But if you look at the larger time frames, the weekly, the monthly, that's a beautiful transition A. What's the difference between PDLI and NVAX? No difference, right? I'm in the NVAX long. I'm in the NVAX as a long-term play also. The SBGL I just took half yesterday. So SBGL, I've been in it since 289, right? Check it out. Where's 289? Let's take a look. I'm gonna get rid of this. And so 289 SBGL. It's the same idea as the NVAX. Look at this, guys. Since this day, right? I'm in it, and I just took half yesterday for the first time. That's how to hold. I mean, that is how you can, you hold. I don't always do such a good job of holding, but that I think I did a pretty good job of holding the stock. So PDLI is the same type of setup. SDLP is a climactic buy setup. If you look at the hourly chart also on the left side, the gray chart is the hourly chart. It's a breakout, setting up as a breakout. So I do like it higher a lot. So these are some watches. I have a lot more, but I'm just giving you some of the ones that I think are ready to go for Monday. I don't do a video every day. I just do it once a week. These plays are called and posted for the strategic swing traders on a daily basis. So if you want to participate, click on the link in the description. It pays for itself and 100 times more. But I'm not here to sell you anything. You make that decision for yourself. I'm just here to share with you some of the watches for Monday at least. Big is a sell setup on the weekly chart. That's a gorgeous looking chart on the BIG as a short. Probably the DVA is the same. Yes, same exact weekly sell setup. Gorgeous, especially if the market comes in. ELAN is a daily 1, 2, 3, I believe. Yes, it is. It's a daily 1, 2, 3. Since it's a little extended, you don't want to overstay your welcome. So if it triggers, then I would go bar by bar immediately on the daily chart. FDC is a climactic sell on the daily and a rollover or transition C on the hourly chart. The gray is the hourly chart. Can you hear the wind? I mean, this is crazy. Like I said, I live on the top 2 floors of the tallest building in the city. So today is just one of those days. I haven't seen anything like it with wind gusts of 80 miles per hour, up to 80 miles per hour. GME, big gap down, basing at the bottom, under the base, stop above it. So I like it lower. LGF.A, I think, is a weekly sell setup. The one thing I don't like about it is it stayed pretty strong, stayed at the highs. So this might not follow through or might not follow through right away, meaning it comes in, probably goes back up, and hopefully then the second attempt breaks the pivot low and then continues lower. But it's a weekly sell setup. If you look at the weekly chart, it's just a little stronger, a lot stronger than the BIG and the DVA, but the same concept. Quote is kind of a breakdown. Of course, we prefer breakdowns bases at the bottom and then a breakdown. This one is basing at the top. Nice hourly though, nice hourly chart. Top is the same as the GME. It already triggered yesterday, but I didn't take it. So this would be, if I were to do it on Monday, this would be kind of a second chance to get in on the top because it didn't really drop much. Top was my best trade, I think, this day, and I did a video on it. So if you want to check it out on January 30th. That's about it for today. So I talked about the market, talked about Amazon, Apple, and Tesla earnings, showed you how to think, right? as a trader, and I went over the daily watch list. Again, if you like this video, found benefit in it, be sure to hit the like button. If you want to learn more about the swing trading newsletter that I do, send it out every morning, and another update in the afternoon for the earnings picks, for the earnings plays, then be sure to click on the link in the description. But that's it for me. I hope you have a great rest of the weekend, and I'll talk to you guys next time. Okay? You take care. Best of luck with your trading next week.